the United Kingdom's build-to-rent market is anticipated to attract a record £6 billion in capital throughout 2025, signalling growing investor confidence in purpose-built rental housing as a long-term asset class. This forecast, shared in Lambert Smith Hampton's latest report Built to Last, reflects the sector's adaptability amid fluctuating economic conditions. Over the past 4 years, the number of completed BTR units has more than doubled, now surpassing 130,000 across the UK. This expansion is set to continue, with over 56,500 units currently under construction and a further 126,000 within the planning pipeline. A key factor driving this progress is the sector's diversification. The emergence of single-family rentals and co-living projects has allowed developers to appeal to a broader tenant base beyond the traditional young, urban professionals, now reaching families and mid-career renters in regional cities. Although London and Greater Manchester still represent the lion's share of existing BTR developments, accounting for roughly 2/3 of stock, regional growth is accelerating. Nearly 60% of projects under construction are now located outside these two areas. Birmingham, in particular, is establishing itself as a major BTR hub, with over 16,000 units either underway or granted approval, a 29% year-on-year increase. Co-living schemes are also gaining traction, now forming around 15% of the development pipeline. Regional cities such as Manchester lead the way, with nearly half of all co-living schemes under construction or approved located beyond the capital. The single-family rental subsector has seen a surge in popularity among institutional investors. Investment in SFR properties totaled £1.9 billion in both 2023 and 2024, more than 8 times the 5-year average. While SFR schemes currently comprise just 10% of operational BTR homes, they represented 38% of total investment in the past 2 years, highlighting their growing significance. One notable trend in early 2025 has been the rising appetite for stabilized, income-generating assets. In the first quarter alone, BTR investment reached £1.1 billion, following a record £5.2 billion across 2024. Nearly half of the Q1 investment volume was directed toward completed and operational multifamily assets, marking a substantial shift from previous years. Among the headline transactions were Ridgeback's £126 million purchase of the Equipment Works development in Walthamstow, and the acquisition of Birmingham's Allegro scheme by Quadreal and Real Star for around £115 million. Looking ahead, rental prices are forecast to pick up again in 2025 after a more subdued performance last year. Analysts at Hamptons predict average rent increases of 4.5% by the end of the year, with a steady long-term growth trajectory of 4% annually. This outlook reflects both ongoing housing shortages and anticipated changes in legislation, including the proposed Renters' Rights Bill. Simon Wilson, Senior Director and Head of LSH's Living and Capital Markets Division, noted, "We're witnessing a defining moment for BTR. The sector is moving beyond its early growth phase and establishing itself as a permanent fixture in the UK's housing landscape, supported by rising regional activity, continued interest in single-family rentals, and growing demand for stabilised income assets." Echoing this sentiment, High LIFE Contracts Manager Willie Robertson added, "After a slowdown triggered by construction inflation and planning setbacks, we're now seeing strong momentum return to the BTR and student accommodation markets. All signs point to record-breaking investment levels in 2025. As the sector continues to evolve, the build-to-rent model is proving to be a cornerstone in tackling the UK's housing shortfall while offering investors resilient, income-generating opportunities across the country.